Are live. So this is great. Hey guys, we are live. It's been a little bit since we used to go live in the C list, but we are back. This time around, I have Gene with me as a co-host. Our old co-host Lane has gone on to greener pastures, and I guess I've gotten an upgrade with Gene.
So, I don't know if I'm an upgrade from Lane, but okay.
Well, we'll see. You know, we'll have some fun. So, everyone tuning in, we have Jake and Dean joining us. They are aspiring entrepreneurs, and as always with the show, we are kind of going Shark Tank-like style, where we'll listen to Jake and Dean present their new company, and then Gene and I, being the old people now, will provide our 2 cents, and you can decide if it's worth it or not on that front. So with that, Jake, let me hand it over to you. I guess you're going to be the primary presenter.
Yeah, let me share my screen with everyone here.
Okay, let's get started.
All right. So thanks, Charles, for the intro. I'm Dean, and I got Jake here as well. And we started a company called Profit. So at a really high level, what Profit does is we provide liquidity to an illiquid market via a secondary marketplace for sports bets that allows users to buy and sell percentages of bets. So sports bets, they rapidly fluctuate in value until completion, often every second. And currently, users have no optimal way to cash out on their bets change in value. So that's where we're coming in. So for example, on the next slide, we illustrated what the problem and the pain point is. So for example, Jake here last year took Loyola Chicago to win it all in the NCAA tournament. Everyone loves an underdog. They were 50-1 to win it all. So if you put $100 down, you would have the possibility of netting $5,000. So as we all know, they made it to the Final Four. And when they made it to the Final Four, their odds to win it all moved to 5-1. So Jake's bet went up 10 times in value, and he couldn't hedge out because there were still 3 teams left other than Loyola Chicago, and there was nowhere where he could sell his bet because there was no secondary market for it. So what we're doing in that is giving users a platform where they can sell this bet. So in this example, if Jake had this bet at 50-1, he can go and he can sell it. You know, he can sell 50% of it, 60% of it, so he can make money on either side of the bet, no matter what happens. So here we're illustrating that users can, or I should say, users when they're selling can ensure profit. Buyers can maximize odds. I'll walk you through a quick example in a sec. And then users can also access data via our bet tickers on a comprehensive data analytics focused platform. So just to jump back quickly to why buyers are maximizing their odds. If you're going and selling your bet and call it that 50-1 bet at 5-1, no one's going to want to buy that because they can just get it at a sportsbook for 5-1 at the same price. However, if you were to sell it at 6-1, it's a no-brainer. A buyer is getting a cheaper rate and they're getting more money possibly from that bet at 6-1 than buying it at 5-1. So buyers are getting the best odds in the market that sportsbooks simply can't offer, and sellers are guaranteeing profit. Everybody wins. It's a no-brainer. Jake, I'll hand it over to you to explain more of how it works selling and buying wise.
Sure. So we've made these flows as simple as possible. As Dean said, we're looking to have a data and analytics focused platform. So you simply take one of your previously placed bets, and this means that you're coming and placing your bet with a William Hill or Betfairs of the world, a bookmaker. You're not placing it with us. So you come and take that bet that you placed with William Hill. As Dean was alluding to before, you just choose what percentage of your bet to sell, this depending on your risk appetite, and you select the price and odds you want to sell it at. So that's what he was alluding to with the 6-1 rather than the 5-1, and the no-brainer for the buyer there. And then your bet goes live on our platform, and it's listed until the full sell is reached. So what that means is that users can buy into percentages of bets. So if I'm selling $100 worth, the user can get in at $13, $2, $8, essentially until that full price is reached. So just a screenshot wireframe here to walk you through what it's going to look like. So what we're doing here is we're asking you a series of prompts to get details surrounding your bet. And that way we can match it one-to-one with our API, pull in current market odds, what the value of it's worth, and then in the end, validate it for settlement. And then this is our second page here, asking you to enter in the total wager values. You can see in step 1 how much you'd like to sell, and that's again on the risk appetite. So you can sell 50%, 70%, 100% if you think the team's just going to flat out lose. And then finally, you select your price, and that adjusts the odds also. And if you notice in the top right box, we're pulling in this data surrounding the current market odds, so you know exactly how much your bet's worth on a sports book. And then as you adjust the drag bars, we're showing you the total profit if the original bet wins and the total profit if it loses. So how you can make money on each side and adjust, as we said, to your risk appetite. So on the buying side, a little different. You would sign on to Profit and you just browse the marketplace. And what we're looking to do is allow you to view statistics and news surrounding events, teams, or players. And what that means is you can browse by an event such as the World Cup. You can browse by a specific team such as Manchester City. You can browse by a specific match such as Team A versus Team B, or you can browse by a player. Once you're looking at all of these, you go on and you select which bet you want to buy, how much money you want to put in. You can buy the full sell price, or you can buy as much as you want. And this is just what it looks like. As Dean was saying, we graph the data over time and the odds, giving you the ability to tailor it to your needs with our over here. We allow you to adjust the time frame, which specific bets you want to see the graphs for, where the movement's done. And we're also pulling in news and media integration too. So why the line movements happen, if there are any injuries, coaching changes, stuff like that. Once you select here, we got Russia versus England. You select Russia, you want to buy that bet. Then this modal pops up. That's where you select how much of the bet you want to get in for. And in real time, we're telling you how much money you're making with us over if you were to get this on a sports book. I don't know why my picture is not up. There we are. So our team, obviously, to create a platform of this magnitude and scale, we need the right team in place. So Dean and I are happy to, as our backgrounds, we're both from finance. Dean was investment banking. I was in financial and technology consulting, mostly software implementation. But where we've really hit the home run is with our CTO, Andrew Duck. He's been building trading platforms for the Wall Street Journal, New York Times, and Nat Geo in Asia for the past 10 to 15 years. He started his own company, Audience Media, sold that to Zinio, which is Adobe's biggest competitor outside of the US. He oversaw their 200 million active users, managed over 2,000 engineers in his time there. And I should say Zinio acquired his company, Audience Media, and then made him acting CTO. He took a year off, wanted to meet people. He currently resides in Vietnam, although he's Australian. Wanted to take a year off, meet startups from the West like us. Fell in love with Profit, the idea, saw the potential, and we have him on board. And then our final board advisor and team member right now, Alex Griffin. He was integral in creating the design and feel of this platform. So trying to blow other sports platforms out of the water built on these early stacks. He's exited and founded in the UK before. His experience is crucial to us, and you can see the list of awards that he won over there during his time. I'm going to pass it back to Dean for the market sizing over here.
Yeah, so what we're doing is we're launching in the UK for a couple of reasons. One, the market's way more mature. Two, it's fully legal there. It's been legal since 1961. And three, because it's been legal since 1961, the bettors there are way more intelligent, and it's easier for them to grasp a concept like profit and for us to get their attention. Also, currently right now, the market there is about 4 times the size of the current US legal market. So just to quickly run through the numbers, I know it's in pounds here. It's a little tough going from UK to US and back and forth. That's about $65 billion of wagers placed in 2016. That's obviously a huge number. There were 33 million online accounts in 2017. That's as of March 2017. This is my favorite stat. There are 65 million people in the UK. There are 33 million online accounts. That's outrageous. 35% of which have bet weekly. So it's just astoundingly massive there. And the projected growth rate is 11.6% through 2021. Moving on to the US. Again, this is not fully mature, but these are the projected numbers of what it could be. So 190 billion pounds, it's roughly $250 billion of wagers placed. That's an estimated figure in 2016. Obviously, it wasn't legal in many states in 2016. There were an estimated 44 million customers at that time. And again, just like the UK, it's projected to grow massively. After we launch in the UK, which we're projected to do in about a month. We are moving over to the US in addition to staying in the UK about 6 months after launch, letting the market fizzle out a bit, seeing if there's any plan to institute a federal bill. But we're going to get into legalization in a little bit. As for our current competition, there isn't much. There's one company called PropSwop in the US. What they do is they basically have the same concept as us, but at a much lighter scale. So they are a secondary marketplace for sports bets. However, they only accept physical sports tickets. So what you have to do is you have to give them your physical sports ticket. They put it on their platform, and then a buyer can go and buy a ticket that's listed on their platform. They then mail it to the buyer. If the buyer wins the bet, he mails the ticket to the casino, and the casino will mail him his money. As you can see, it's a very clunky process. We're looking to digitize that whole process. Also, we're looking to have users buy and sell percentages of bets, not just whole bets. If you think about it, if you sell your whole bet, you're basically betting against your original self, because you have to give all of those winnings to the buyer and you net nothing, which is obviously what we want to get rid of. So there's PropSwap. Then there are traditional exchanges and sports books in the UK and US that really don't focus on this at all. So the DraftKings and FanDuels in the US, they offer cash out rates, but that can't really compete with us. It's not necessarily the same idea. And same thing with exchanges. Jake, you want to talk competitive advantages?
Yeah, so the question is obviously, why are we better than the aforementioned? First, obviously here, first to market, as Dean was explaining, there's no concept like this out on the market. No one's thinking about trading or laying off risk the way we are on a platform that's this design and analytics focused. Our probably biggest competitive advantage is our market rate cash outs. So books do offer the ability to buy back your bet. So if I'm placing a bet on William Hill for a team to win the Super Bowl, we have a few months go by, the team's looking good. The bookmaker offers me a rate asking to buy it back. Now, what we found is that those rates are sometimes 30% low to upwards of 50% lower than the market rate value. So by being an independent third-party platform, we're able to offer them to lay off risk in the most optimal fashion. And the reason sportsbooks can't offer these market rate cash outs is because when they're buying back bets, every dollar that they spend closer to market rate is eating into their own bottom line. So if they were offering market rate, they would be cannibalizing themselves. So that's why there needs to be, as I said, that independent third party. We're consumer facing. So what that means is that users have the ability to browse bets that are being laid. So if you go on any exchange and you want to create a bet for yourself in a peer-to-peer method, you're logging on, entering the information, and then just hoping that it gets matched. There's no way to browse and see what people are offering or really what the market's looking for. But with us, we've taken the level deeper than any sportsbook or exchange has before. And that granularity has allowed users to go on and see a bunch of different bets with a bunch of different sale prices and percentages that they can get into. The last two are kind of just focused on us as a startup. So we've obviously taken a UI and UX centric approach. Sportsbooks are operations-based companies that are built on technological stacks, the early 2000s, and they haven't changed it up much because they're just cash cows. They're raking it in. There's no reason for them to. So as you can go on, they're riddled with ads. The user experience is terrible. The layout's terrible. And this is the feedback that we've just gotten from people we've been talking to in social media groups, Twitter, stuff like that. It's obviously our opinion as well, but it's commonly shared amongst the UK market. And then finally, as a tech company, we're able to move quickly. We're not operations-based like these large sports books are. And our focus on analytics and data and driving that into our marketplace really has been instrumental in getting the feedback that we have, or the positive feedback, I should say, that we have with our end users that we've talked to at this point. Dean mentioned PropSwap earlier. They ran a beta testing in the US in 2015. They had, as you can see, 8,000 unique visitors. 900, a little more than 900 sign up, and their conversion rate and bounce rate were astoundingly high for the industry average. So even though this was just a sample size, you can see that there is a want and need for this in the US, and people were flocking to it. So they validated it essentially here. And these stats just indicate there's an increasing desire for a secondary marketplace and laying off risk, not only here, but from the validation in the UK as well. Finally, our timeline here. And this is a bit stale, so I'll just walk you through it. But in August, we started MVP development and filed for our license. So what we applied for in the UK was a remote operating license, and we worked with a firm called Harris Hagen, and essentially they've never had an application denied. I think they're 81-0. So we've worked with them for the past 7 or 8 months, and that was essentially the vetting process for us. Our application's filed. We've received our first round of feedback. It's been positive. There's just some simple business model questions they're clearing up, but we expect to have that license in the next month. With that being said, we're 90% close to complete with our builds, and then beta testing begins from there. So this timeline is pushed back probably about a month. We're not looking to launch in January, but in February. And in that same time, we're looking to roll and close our funding round. We've already had 160K committed via convertible note. So looking to get our verbal commitments and reach back out to them. In addition, we've been accepted to an accelerator in Charlotte called Sports Tank Innovation Studio, which is going to help us out with that. So just looking to roll and close that over the next month, along with launch and get the license. For looking forward, we're looking to launch in the US, as Dean said, about 6 months after we launch in the UK, pending any legalization. So letting that fizzle out. The landscape's still a bit unclear, but it's starting to get more and more clear week by week. And then from there, going global, it's actually very easy. So the UK is regulated by their own body, but most of Asia, Australia, South America are all go through Malta. So we apply for one license in Malta, and then we can open up our outreach to the rest of the world. And then from there, continue hiring, expanding, ramping up marketing, and cementing ourselves.
So I'll take us home here. We're looking for 800,000, as Jake said, via convertible note. The terms on our previous note were a $10 million cap with a 20% discount, a 24-month expiration period, and a 6% interest rate. We're obviously open to negotiation, but just wanted to state the terms we previously agreed on. As for the budget, again, I'm going to move pretty quickly here just so we wrap up. But this is through the end of November. I can also talk about our budget through the end of or through a year from now or 18 months. These are based off our projections. So our minimum burn is 350,000 over 18 months, but through, as here is shown, the end of November, based on our projections of user growth, which is what a lot of our expenses are tied to. This is what we're outlining here. Charles, Gene, anyone else, if you guys have questions surrounding that, I'm happy to answer them after the presentation. Legalization-wise, UK, again, fully legal once we just get our remote betting intermediary license. And in the US, it gets a little trickier. This is a little fun. So if you go to sell a bet, you own that bet. And when you own that bet's considered your property, and you can sell that to anyone else in the world, granted they're over 21, or anyone else in the country, granted they're over 21. However, that bet, one, has to be legally placed at a sportsbook, and two, as of now, you can only buy in 12 states, and we know that because of what PropSwop is doing. So you can buy a bet in 12 states right now. PropSwop does not need a license to operate because, again, you're just acting as an intermediary for people buying and selling bets from each other, which is pretty cool. So what we're going to do is we're going to digitize those bets in the US. We're happy to talk about our plan for that as well. And then just for a timeline in the US, state-wise, this is, again, just based on a lot of research we've done and a lot of people's projections. Assuming there's no federal bill passed, this is what the timeline is going to look like. So by 2023, so in 4 or 5 years, all but 5 to 10 states are going to legalize betting. So the market's going to be absolutely massive. And that's all we got. We also got an appendix where if you want to just scroll through that, and you can see the differences between cashing out at a sportsbook and then operating through or selling your bet through us, how much more money you can actually make with profit as opposed to cashing out. And then we just dive a little deeper here into our marketing strategy and our go-to-market strategy. So that's all. Any questions, we'd be happy to answer. Charles, Gene, I'll let you guys take it away.
Yeah, do you mind if I go first, Charles, and then?
Yeah, well, first I just want to congratulate, Jake and Dean. I mean, they're 20, you guys are 22, 23, or
23.
Yeah, this is pretty great for a 23-year-old to put together. So definitely want to give you, kudos for putting this together. I've got a bunch, but Gene, why don't you start with some of your questions?
Sure. Yeah, I'd like to know where the dev is at this point, right? Are you guys ready to launch? Do you have some work? Like, where's the development at this stage?
Sure. So as I said in the presentation, we're about 90% done. We got a little hung up with our information architecture and just data categorization based on the way our API gives the feedback to us, or not the feedback, the data to us, and the way we want to present it on our platform. So we've just been building a tool to work through that. Payment providers integrated, should be ready for testing in 1 to 2 weeks once we work through the data categorization issue.
Okay, and is there any legal ramifications for selling partial bets? I mean, I know you said that it is, and let's talk about, well, both the UK and in the US, right? Has that been tested yet, selling the partial bets?
Sure. So in the UK, we're not actually linking bets together. So the ramifications for selling percentage of bets aren't existent essentially. And what I mean by that is that we're just allowing you to enter in your bet details and then giving you a platform and another user to optimally lay off your risk rather than actually transferring the ownership of the bet. So you're still keeping your original bet with your William Hill, and then you're coming on to profit and you're laying off risk in another way through a peer-to-peer contract. So there's no ramifications for that. In the US, we haven't seen that been tested yet. PropSwap, as we said, does it through the whole layoff risk approach. But early feedback and the way we've seen states go about it is that as long as it's considered a bearer good and they're offloading it in their state with following anti-money laundering, KYC, all of the essential stuff, then they see it as completely fit. And that's what the Nevada Gaming Board and regulatory providers there ruled as well. And that was in 2015.
Yeah, and can you walk me through the process? So if you don't have a physical ticket, right, you guys don't take possession of that physical ticket, right? So how do you like ensure that the person that's selling their bets, right, selling the percentage of their bets is actually they're actually going to divvy it out to everyone after the event takes place and they've won or not won?
Right. So in short, we don't. And the reason we don't do that is because we don't want to go through as a platform and on our end, the due diligence and making sure that they actually have these bets in place. What we're doing though, is we're having the money has to be fronted in an online wallet. So that's where I was referencing our payment provider. And that's pretty standard across the EU and all these countries that have regulated betting been legal for years. So users are used to fronting the money, having it in their wallet at the time that they're placing the bet.
Almost like an escrow account that they put it into. Is that kind of what you're saying? And then, okay, that makes sense.
Yep.
Awesome. I have a few more, but Charles, I'm going to give you a chance to.
Yeah, sure. I mean, we can dive into things. I guess I'll let you guys pick in terms of how you want me to, which line do you want to start? So there's the investor perspective where I could give you feedback as, how I would look at this as an investor, because I have, I actually do a decent amount of angel investing myself. Or I can give you kind of go-to-market questions. They're both related, but they're, they might go down different paths. So which direction would you guys like to start?
I would say go market, and then we can work through the investor towards the latter half.
I was going to say the same thing.
That's fair. So go to market's always, and I just want to clarify first, you guys are a B2C play, right? Like you're actually going to go acquire individual sports bettors to go buy your platform and everything? Okay. So the first impression I have is both of you guys are very talented technical people. So, you understand, it's a kind of a cool concept, right? I mean, it's no different than hedging or futures markets where I want to take some of my, I've made some money, I want to take some profits before. And that's great. However, it's so very technical that the first thing that comes to mind is is that really going to acquire the consumer? And when you talk about consumer acquisition and everything like that, are you aware of like what DraftKings CPA numbers are, or some of these consumer guys in terms of what it costs for them to acquire customers and everything on that front? Like, do you guys have those numbers?
Yeah, so Betfair is a publicly traded company. So in 2014, their CAC was roughly $75. Okay. And then from 2014 to 2015, it was roughly $110. So go on.
So every time when you look at a consumer business, it always boils down to what is your customer acquisition cost and what is your LTV, right? Like those are the two numbers to look at. And if you're going to a consumer business, the only reason for a feature or something cool and interesting is that your features supposedly should either give you a higher LTV or reduce the CAC in terms of acquisition. So do you see me like, so what is your, like, you've got some expected LTV or something put into play, and like when you're coming together, like I guess it's like, when I see it's like a consumer business, the presentation is all about this wonderful technology you've put together. So if your acquisition strategy was, okay, we're going to build this great technology and go B2B and, you know, put our platform into DraftKings, or, you know, get it synced into the casinos, or like that other competitor that you have. I mean, what they've done, they haven't really gone B2C. It seems like they've just gone into the Vegas casinos and said, hey, we'll give you a new revenue opportunity. Do you see what I mean? Like, that's what I see when I hear like you're going to go after consumers and go acquire consumers and all that sort of stuff. And I happen to live in that world, so I know it fairly well. Do you see what I mean? Like, as an investor, to invest into a consumer products company or a brand or something like that, that's what I'm thinking of, or that's kind of what I'm looking at, right? Because those are the big numbers. You know, that's what makes or breaks your business. So do you have those sorts of numbers, or can you talk more about those? Or
Yeah, I can talk through the numbers. Jake, I'll let you, after I talk through some numbers, just talk about our general go-to-market plan.
Cool.
But Charles, as you were saying, we fully believe that our advanced platform is going to bring users on for a longer time period. So what we've done is we researched basically the average lifespan of a consumer on a certain platform. And once a user gets used to a certain platform, they become married to that platform. I mean, Jake and I, we have tons and tons of friends who bet as well. And then we've also spoken to a bunch in the UK. And when you get used to a betting site, you use that betting site. You're married to it. You use it for years and years. So what we did is, in order to project LTV, we took the average, based on our research, the average betting amount of each user, and we're projecting that at £1,000. And then we take our commission rate, which is 3%, so £30 per user roughly per month. Multiply that by the exchange rate, and you're going to get something around $38. So if a user is generating $38 per month, we're also averaging a lifespan of 12 months per user. That could be very lowball based on how long we're operating for, right? But basically we get these users. So that number is roughly $461 for an LTV. And then our CAC, based on, and I'll get into it in a little bit, based on a ton of factors, is roughly $81 over the next 3 years. So that ratio comes out to roughly 5.7. Our CAC, and Jake's going to get into this a little bit more with the go-to-market strategy, a lot of it is based off of what we're paying professional bettors who sell their picks to bring their followings onto the site. We've already dabbled in this a little bit and experienced a little bit on Twitter. We've paid a few guys to essentially tweet about us and to bring users to our platform just to sign up. So we're thinking roughly £20 per customer that deposits onto our platform. And then we're projecting that that's going to be roughly 25% of our customer base, of how we acquire our customer base in the first year, 20% in the second year, and then 15% in the third year. And then over time, essentially that £20 becomes less of a factor in our CAC. We're also looking at coming on podcasts. Jake, if you want to just get into that a little bit more about the podcast and whatnot.
Sure. I just wanted to see if you had a question, Charles. It seems like you had something.
Yeah, I guess, the good news about this is once you have a customer, they're there. The bad news is if you don't have a customer, or if they're on someone else, they're not going to want to switch because all their betting history or everything is on, call it archaic platform number one. And I'll use DraftKings because I'm vaguely familiar, with them, right? So my stuff's all in DraftKings. I've got all my stuff in the past in DraftKings, and I see your thing. So I guess the first question is, are you acquiring new people entering into the market, or are you trying to convert people away from an existing platform?
Well, we're not converting bettors away, essentially. We're a third-party platform that will be used with other sportsbooks and exchanges, right? So if you use that DraftKings platform and it has all of your betting history, you can't trade out at a fair rate of some of these bets that you'll have. So you'll come on Profit, and then you'll come and use Profit to trade out of your bet or to sell part of your bet, or maybe to buy a bet at better odds. And then in addition to that, you'll also see the bet's trend over time. You'll see news and media relating to your bet.
Yeah, that's everything else. So basically, the concept will be or your idea is that someone will switch to you guys because going back to it, right? I threw in what, I look at these as the moonshot bets, right? It was 1,000 to 1 moonshot bet that, some crappy little team on the Final Four or at the NCAA bracket would make it, and they pull something and they're in the Final Four, and it's like, oh my gosh, it was 1,000 to 1 odds. Now it's 5 to 1 or 10 to 1. And maybe it'll go, maybe it won't go. I suspect what'll happen is it's people who have won lottery tickets or who are almost at the lottery ticket number, and they just want to cash out because they probably perceive that there's some loss, like some money is better than none, because the probability of, someone having a magical season is slim to none, generally speaking. So,
right. So, sorry, go on.
Oh, no problem. So that's like what's in that mind of the consumer. So then what happens is they then go and start saying, oh my gosh, I guess the first thing is going to be an awareness question, right? How does the consumer even know that something like this exists? Because the number one thing people have is apathy, right? They're busy doing their thing. They're not paying attention to stuff. You bet. I mean, do you see what I mean on that front? So whether or not they switch. The second question, I guess, is you're going to do an influencer strategy where, I guess, yeah, I mean, yeah, so basically, like, these are the questions that go through my head when I start thinking of your acquisition strategy. And the reason why I'm focused on this and everything is, as a consumer company, I mean, there are so many, I think, and Gene, you can probably attest to it. There are so many great companies out there that build great technology, but, without a good customer acquisition play and without even able to hit those numbers, I mean, that makes or breaks you, on that front.
Sure.
Can I ask a follow-on question just to make sure I'm understanding it right, guys? So your customer, let's say, you're not trying to necessarily like take a customer away from DraftKings per se, right? You're trying to, maybe somebody that just placed a bet with DraftKings might be your customer, right? Because they have that bet and that they've placed through DraftKings, and they're going to want to sell a portion of it off, right? So am I understanding that properly?
Right. We're a secondary marketplace.
Yeah, they're not placing the bet from you. So in actuality, you are complementary to what DraftKings is being. So you may even you may actually even want to be advertising or marketing to current DraftKings customers, right? Am I understanding that right?
Completely.
Well, if you're complementary, though, that will affect your LTV values, because your LTV is based on the lifetime value of somebody on DraftKings. And you're assuming once they buy on your platform, they'll switch all their stuff over. If you're just complementary to them, your LTV will change, because then I would imagine what would happen is, I mean, you have to also look at this from a product side, right? If you want to capture all the revenue of what DraftKings offers and stuff like that, you're talking about building these news feeds and these updates and these other sorts of betting tools that people have. And, no matter how good your interface is, these mature platforms, they've just built up so much stuff. You're not out of the gate going to have everything that DraftKings has. I'm sure it'll look better. And, there's going to be some improvements that have to be made on that sort of stuff. If it's just a complimentary thing where the person comes in, makes that sidebar bet, and takes some cash off, get some chips off the table, but then they go back to DraftKings, that dramatically affects your LTV, because you're trying to monetize through all the transactions. Is that right, or am I mistaken?
Does it though? Does it really affect the LTV? I'm not sure.
So let me just explain one quick thing, Charles. I heard you mention this. So you were talking about the moonshot bets, right? I mean, you place a bet on a team that's 50 to 1 to win, and then they move to 5 to 1, you can cash out. That's just the easy example here, because it's just a very easy way to think about it. If you think about it in terms of live bets, and this is where we're going to make most of our money, in Jake and I's opinion, is if you're in the UK and you bet on Arsenal versus Tottenham, I don't know, and you took one team to win at even odds, that line is going to move so rapidly, just depending on where the ball is kicked and based on, who looks good and who doesn't look good. So that line is constantly moving. So you can sell your bet. Let's say you bought it at even odds and now they're 1/2 odds, minus 200, whatever you want to call it. Your bet's gone up 2 times in value. You can go and you can sell that on our platform in real time. So it's not just a smaller market of bets. It is every bet that is out there. So as for affecting LTV, I think that'll answer part of your question because we do have.
Okay, so what you're saying is the potential for being able to get out of any of my bets because lines always change or whatever, right? There's a big soccer game and the line was this way, and then it finds out that the star player got in a car crash, won't show up, and obviously the line adjusts and things like that. So that sort of variability and that sort of a marketplace would incentivize the person to be on to put more bets into your platform. That's basically what you're saying.
Correct. And users, we've spoken to a ton of them over Twitter, a ton of professional bettors and a lot of their following. I can't even put a number on it, honestly. They have all told us, listen, if you can make us more money, I'm going to use your platform. And everyone knows that the cash out rates that sportsbooks offer are very unfair. And as Jake alluded to before, because for every dollar they offer you above the initial sale price that they gave you, they're losing money. So if they were able to cash out at a fair rate on our platform, they would do it way more frequently than the ripoff that they're getting at these sportsbooks.
I guess the question then, the example I'm now thinking of is, professional traders versus, your standard stock investors. So, in people who buy stocks or who have like a TD Ameritrade account or, who are buying cryptocurrencies, there might be, 10 million people. And of that 10 million people, there's a smaller percentage that are saying, oh, let me go buy on every dip and buy on every bounce and try to, arb stuff, and they read technicals and all that sort of stuff. So I could see where there's a massive, there's a hyperactive betting market of people who are either professional bettors or who kind of look at that stuff all the time, that the instant there's an advantage out there, if you cater to them initially, that will give you traction on that front. Now, will the users, I can see that. I guess the question I have, and I'm not an expert in this betting space, so I don't know, is, if you look at the average DraftKings customer or whatnot, right? How many of them are, the professional ones that just like do this as a pastime and everything like that? And how many of them are, just people that, I don't know who's playing, football. Is Brady going to beat, the Kansas City Chiefs, or is, soccer team one going to beat the other one? What does that represent from a percentage basis on that front? Because you're definitely right. The professional user will be like, they'll go crazy over this stuff. The average user, I don't know if they're even sophisticated enough to understand, what, like you probably have to like normal people are going to say, what, I can sell my bet? Like a lot of people just bet on things because they like it.
So this kind of goes back to the UK being just way more mature than the US right now. It is way easier to talk to people in the UK about this than in the US because, like you said, they're just way more average bettors in the US, whereas in the UK, there are like a lot more tiers essentially. There's like that top 1-2% of people who, they hit on 65% of their bets. They're the smartest of the smart betting wise. And then there's like a massive tier 2 of people who are intelligent bettors. They know how to make money. They know where the public money is lying. They're doing a lot of research, but they're not 60 to 65%. And those are the guys that are constantly looking to cash out and take profit wherever they can. I don't have a figure for you. That's a really hard figure to find. I wish I could give it to you, but I can tell you that roughly 10% of bets are live in-play bets on sportsbooks in the UK.
Which makes sense. So going back to, call it feedback on the presentation, unless you're talking to somebody who happens to be in the betting world, which, maybe you're going to raise money that way or not, your average investor isn't going to have this level of insight. And if you address that up front, that helps a lot, right? Because every consumer business, anyone who knows consumer businesses always thinks of, oh my gosh, what is this go-to-market strategy? Why are you guys going to be able to acquire customers better than the next person or whatnot? Because there's a graveyard of littered technology startups that have built great tech and have it. And it's clear that you guys have an understanding of the market and have an understanding of the consumer, but that doesn't come through in your initial presentation on that front. Do you see what I mean? And if you think about this, if you're in a pitch with somebody, I mean, we haven't even gotten to the actual deal and the exit stuff. And you've already, you know, we've spent the last 20 minutes talking about customer acquisition and everything on that side, which is information you knew, but that wasn't communicated as part of your presentation. Does that help, or does this make sense?
No, it totally helps. I like the feedback.
Yeah. Hey guys, a little bit off subject, but I just thought of something that I think is kind of cool, right? So Charles, you in particular, you have experience with signals trading as far as like in the cryptocurrency world, right? So there's this whole other industry that can kind of, I think, pick up. There's these tools and stuff, things like Crypto Hopper and things like that work alongside with these exchanges, you know. And I'm just kind of comparing it to cryptocurrency because the price goes up and down and all that kind of stuff. I could see almost like eventually somebody creating a tool as a way to sort of game that, you know, kind of thing, like, you know, like a tool that could actually trade when the margins change automatically, and then you could get, you know, less sophisticated investors to maybe come in and to use a platform like this. Do you get where I'm going with this, guys?
Yeah, I mean, that becomes an interesting discussion, and that's a strategy discussion. I think, you know, from a perception management side, if your go-to-market strategy where you were going to be like an add-on tool for DraftKings or some, you know, an add-on tool for DraftKings or some major sports betting thing to help them retain and maintain their hyperactives, I would view the presentation a lot differently, because then it's just like, it's execution risk. You know, are you guys smart enough technically to kind of figure out all this sort of stuff? And the way you present yourself is, okay, you guys are actually pretty intelligent people. Like, that's not my concern. When you present yourself as, hey, I'm going to just go to market and then compete, you know, using the crypto example that Gene says, you know, we're going to compete against Binance or compete against Coinbase that has, you know, 5 million existing customers or 10 million existing customers, that becomes a different discussion. And I'm not here to tell you how to redo your business model or anything on that side, but they're completely different things. I could see it definitely, like, I mean, it's like you said, Gene, there have been tools that have kind of tacked on to the exchanges where it's like, okay, you've got, you know, your 10 Bitcoins or your 2 Bitcoins or whatever, or you've, you know, flipped it into a bunch of, you know, alts or whatever. It's just sitting there. And now there's this add-on that you can add on to your wallet that allows you to kind of, you know, catch dips and peaks and maybe make a few extra coins or make some more money on that side. And then in that scenario, then it's all execution and technical risk. Like, are they smart enough to actually make this thing work on that front and do like all that tech stuff or whatever that goes into, you know, building your marketplace and calculating your spreads and doing everything on that side.
Yeah, and I think my example here was more along the lines of, I think eventually after this thing starts gaining some traction, I thought it was just a really cool sort of add-on business that somebody could tack on to your company, right? Like Crypto Hopper, right? They're not an exchange. They just found a, you know, there's APIs that the exchanges open up so that you can, you know, you can trade by using their API without being, you know, a physical person there pushing the buttons and stuff. That's just an idea that I had, right? That, you know, eventually I think a market like this could come up, just an extra, a secondary tool that somebody may come up with eventually, or maybe something you guys want to consider as well in the future, right? Because it's definitely a way to have the average person. Like, I know my brother-in-law, for example, uses DraftKings like quite often, right? He's crazy about it. In fact, he moved to Washington, where I think it's not legal to use DraftKings, so he uses a proxy so that he can, or a VPN, basically, so that he can still place his, you know, change his lineup or whatever for, I don't know that much about how DraftKings works, but so he can still use the platform, right? I'm sure somebody like him would love a tool that took the sophistication level out of it to, you know, just to you guys get where I'm going with it? Just
totally, and that totally makes sense. There should totally be something out there for that.
Yeah, and the one thing to think of too, and now let's segue actually into kind of the meat of the thing, which is really the ask you guys are saying is, you know, what's the investment deal look like and everything. The thing every investor, it's no different than, you know, you guys are better, so you understand. I mean, angel investing essentially isn't that much different than sports wagering. You
We
know,
laugh at people that say they don't do gambling because we're like, you do angel investing. So tell us how it's different.
exactly. It's very similar, but similar to someone who's wagering, well, there's different types of investors. You might have some that are just, friends and family and they like you, or, they just want to do it for status, or they want to do it so they can go to the country club and talk about that. But someone who is an investor, who has expertise or experience doing it, they're looking at this as, okay, I'm going to put some money in, whether it's 10 grand, 50 grand, whatever the heck it is. Then they're going to say, what's the next step? Is there probably going to be a follow-on round? In your case, you guys are just getting the safe to get you to MVP. So there's going to be some sort of a follow-on. And then there's the question of what is the exit on that side, or what is that perceived exit? Because it's literally all a function of risk. And right now, in looking at this, it's kind of like, you guys are smart people. You guys give the perception that it's actually a pretty cool and novel idea. I really like the idea. But from a deal perspective, it's like, okay, I'm going to invest or, loan you through the convertible note some money so that you can build this cool little idea. And then what? Do you see what I mean?
Yeah. And honestly, I just didn't dive into that because we were already taking up a little bit too much time. And that's definitely our mistake. But as for, the timeline of that, we're going to raise right now, and that's going to get us through what we're targeting is 18 months. And then after 12 months, we're going to look to raise our Series A. It's tough to predict our Series A right now. We have a general idea of where we want it to be, but, we don't know, one, how much these users are going to be on the site. So that's going to affect server costs. And then two, we don't know exactly what features users are going to want to see. We don't know, we have an idea of how many engineers we want to add on over the course of time. But obviously, based on this user data, that's going to affect how many developers we add on. So that is a big expense. And that's obviously going to be huge in our Series A. A lot of other factors, like, are we going to go to the US in 6 months? Are we going to go in 3 months? Are we going to go to Australia 12 months down the line? A lot of different factors are coming in here. So it's really tough to get a really precise estimate on our Series A. We obviously have an estimate and we have a plan in place, but not a direct enough plan to really present confidently, if you see what I'm getting at. However, what we do want to do is in 5 to 10 years, we want to exit. And we've done our research. We've looked at the companies that are buying. We got Paddy Power Betfair Group, who recently bought FanDuel. There's the Stars Group, who's made a couple acquisitions. GVC bought Ladbrokes in 2018, and they bought CrystalBet in 2018. A couple other companies like Betson, Leo Vegas, the Tats Group. And we're confident they will buy a company like ours because they've been buying in the space for over the last
everyone's confident if you have everyone will buy a company that's successful.
Yeah.
Question, it's like, oh, if I have 1 million customers, of course I can sell it, right? The question is, can you execute and get there? And that's the thing. So this goes back, I know I'm circling back, but like, if I was looking at this from an investor perspective, it's all about risk, and maybe I'm too conservative or whatnot. But if you'd come like the way you guys present yourself is, you guys are these solid technical, like you obviously know this sports betting market. The question is, even if you know it, will people get adoption? Like if you have like someone from DraftKings or someone, or the UK equivalent of DraftKings and saying, oh my gosh, this thing is the greatest thing in the world, and we want to use this to implement this as part of our stack so we can, help our buyers be more efficient or whatever on that side. That would probably that makes it very interesting. Do you see what I mean? Because then it's like, okay, there's a problem, there's numbers and all that. And I'm not trying to dissuade you, but it's one of those questions where you're gonna have to look at your time, based on what you've said and based on what I know, and I'm not an expert or anything like that, like what you said makes a lot of sense. And amongst that, hyperactive bettor is probably something that they're gonna wanna get. So if that's truly the case, all you gotta do is build it. And if you actually build it, they should come. But if it is that great, why, you could just go to the casino or go to the sports betting arena or just, make a few phone calls, find those right people. Like if it's that great, they'll be interested. And if they're not interested, then that tells, you or, the outside person one of two things. One is maybe the problem's not that hard to solve and they're not interested because, oh, they'll just kind of reverse engineer based on it. And then there really is no, call it, technological advantage. Or B, maybe the problem really isn't that big and they don't really care about that on that front. Do you see what I mean? Like this is maybe just some feedback. And then if you can imagine if you were raising your note against that, it becomes much more compelling because it's like, okay, we've got XYZ guys or whatever. They've got, 100,000 users or 50,000 users or some number of users that make so many bets and stuff like that. We have this expectation that that percentage would come into here. We just need to build it. And then we'll have traffic kind of running through this. Because the question I have, which goes back to the acquisition question, is, okay, you build this whole thing. That sounds like it's great, but will anyone actually use it? And that's another big unknown on that front.
Right. Just to speak to those points quickly, in terms of where we have gotten our validation from within the industry. The first, as Dean said, is those professional bettors and handicappers, people that do this on a daily basis over in the UK, have said, let's bring my guys over here. I understand it. I think it'll make them more money and that they will come over and use it. And then secondly, we're headed over to ICE next month, which is the largest sports gambling conference in the world, pretty much, in London. And we have meetings lined up with small bookmakers there. So not the Paddy Powers and William Hills of the world, but smaller bookmakers like Novibet, Mustard Bet, probably guys you haven't exactly heard of. But we've contacted them, reached out and said, hey, we're profit. You can outsource your cash outs to us. You increase your bottom line by not having to buy back bets. And we give you a risk-free revenue stream in the process. And the initial conversations and results from that have been great. They've said this is something we're interested in. We want to outsource our users here. This will save us money. Let's talk more once we get there. So those initial meetings have been positive in conversations. Obviously, nothing's in place yet, but just some comments on the validation there.
Yeah, if you can imagine, Gene, and you can probably speak on your perspective. If you guys have those in play, it makes the investment vehicle much more attractive.
That's our goal here. Yeah.
On that front, because then it's like, okay, they don't have to go acquire. Like if you said, hey, we've got 100,000 people or 50, whatever that number is on that side, then it's just, okay, can they actually build the thing? And you guys, between you guys and then that other guy in Vietnam and that other person's like, you guys, I'm not as concerned about can you actually build the thing. Like that's less of a concern. There's concerns if you can or not, but like that's kind of less of a concern versus, will you get users on the thing on that side? And then will the deal make sense? Gina,
yeah, no, this is great feedback for us, especially when pitching in terms of how we want to approach it. So we appreciate it.
Yeah, I agree. You're taking all the risk out, or not all the risk out, but you're taking a huge amount of that risk out when you actually have the customer sort of lined up through these sort of deals. When is that again? When are these meetings set up for?
February 5th through the 7th, and we'll be in London for 2 weeks. So January 30th to February 11th, around those times. But the conference is the 5th to the 7th.
So I know you guys have had some other conversations as well already, right? With some small bookmakers, if I remember right.
So we spoke to a company called SportsGrid. They're essentially one step above sports books in the food chain, if you can imagine that. So they essentially created an algorithm that predicts daily fantasy sports and predicts the outcomes of sports games. And they're so good that they started a company and they sell their picks now. So what they do is they basically come to sports books and they say, we'll give you all these customers. We want, X% of revenue sharing plus, $100 per new depositing customer, something like that. So they have all these connections to these sports books, and we sat down with them. And as cliche as this sounds, they looked at us and they were like, sports books in the US have no idea what they're doing. And we were like, what do you mean? And he was like, well, we sit in meetings with them and we're like, all right, so what do you guys want to do? And they're just kind of sitting around and they're like, I don't really know. And we sat down with another company called US Integrity, and they basically told us, as cliche as this sounds, like the people who own sports books in the US are 70-year-old guys with, just a high school education, and they really don't grasp the concept.
Back room type deal.
It's kind of alarming. So they basically assured us that they can put us they can put in place the right meetings for us, and then it's just about us going in and executing it. Because if we can pitch to them that we're going to make them risk-free money, they think it's going to be a no-brainer. That's of course based on two companies' feedback, and they're both pretty big in the betting industry. And then obviously we're sitting down with these sports books in the beginning of February, so we'll see what all that feedback is, but we're pretty confident it's going to be positive and we're going to make them more money.
As far as the fundraise process goes, too, how far along are you guys in that process? Are you just getting started? Do you already have some commitments, some soft commitments? Where are you at in that process?
Yeah, so we're just getting started. Really, we had our first hard commitment come in right before the new year. Waited a few weeks till people were back in office to let of our soft commitments know that we are starting our funding round, and we're looking at a rolling close over the next month and a half, and that was sent out last week. Of the money that's come in, the 160K was the hard commitment I spoke to earlier, and those were on the terms Dean said earlier. I think we talked about that. So that's 160 of it, which is 20% of our round right there. So looking to close probably around 20 to 25% in soft commitments from angels that we've been speaking to. And then looking at either other angel syndicates. I mentioned before that we were accepted to the Sports Innovation Tank Studio, which is in Charlotte, and we're pitching at NBA All-Star Weekend in front of like 36 investors, 12 VC firms, one of 5 companies that was selected out of 300. So we're very excited about that and think that there'll be a lot of deals to be made and conversations to be had there. But yeah, I think I hit everything.
That demo day is February 15th, by the way.
Yeah.
One thing I would also recommend, and this kind of rounds you guys out, if you look at it as you're talking to sports books or some of these other sorts of people, if you look at your team, there's no mention of anybody really with gambling, call it expertise. Do you see what I mean? And again, this is a perception thing, because I dealt with this when I was in my early 20s. I never really raised money for my own company, but still, you guys, no one's going to give you guys credibility because you're just kind of too young. Like you guys aren't betting industry insiders. Do you see what I mean? But if you had like board of advisors from DraftKings or blah, 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 that helps on the perception side with that. And with many of these, with many angels and stuff like that, they're not, unless they're like in the industry and then they think it's the greatest thing since sliced bread. A lot of people will be looking at this as more of like a diversification type player. This is interesting, right? I have some intrigue in this because I personally like to invest in trends. And I know with legalization coming around the corner, and around the corner is such a relative term, right? They've been trying to legalize marijuana for the last 7 years.
Around the corner.
That's all right around the corner. But I know like sports betting and gambling or something like that, like something's happening in that space. So I'm interested to take a look at that. And I have a higher risk profile and I'm putting money that, I can afford to lose. So like, I'm okay with that. But do you see what I mean? It's like, I say, okay, let's check it off. First, A, do you understand the customer? So, you got that feedback on that. B, does it sound like you guys can execute? I think you could probably like break down a little bit on like all the execution side. Cause like you guys are just so smart when you talk that like people don't, I'm not saying like they don't care. And I'm saying this like as nicely as possible. Like I can see where you guys are so excited because you've like really like broken this down and you've built this wonderful thing and everything like that. But you don't have to actually explain everything to the investor because for most people you're talking way over their head and like you just start kind of beeping and clicking at those people. Like that's the due diligence side. Do you see what I mean? Like if they really are interested, like you're just trying to get them, like you're trying to hook them in that presentation, right? So it's like, first I want to see like if you understand the customer and stuff like that. I want to see that, oh, okay, you've got some cool stuff or whatever, and you can like literally cut that down to like 2 or 3 minutes. And then it's all about credibility. Like, does the market actually think that you can do this? And like those things you said, hey, we've got this gambling influencer or whatever that's built this thing and they've got, they've grown their YouTube following, or I don't even know what maybe it's Twitter or Twitch or whatever the heck it is. They've grown that from 10 people to 1 million followers in the last 6 months because it's so great. And they're on our board of advisors because they love this thing, blah, blah, like those are the things that from a deal perspective, an investor's looking at this. And ultimately it's about how are you guys going to get money for your thing? Do you see what I mean?
Totally. To address one of those points, we have a call on Saturday afternoon with Tom Griffiths. He's the former co-founder and head of product of FanDuel. He left not last November, 2 Novembers ago now, and his non-compete was up in December. So he's also recently had a baby and started his own company. So it's taken a little while to put this into fruition, but knock on wood, he comes on as a board advisor. He said verbally that he's very interested in being a board advisor, just has to wait till the non-compete is up, but we'll have an update on that in 3-4 days.
Yeah, and you see how like those sorts of things literally like if you had the co-founder of FanDuel on your board advisor, I mean that's
if his face is on that page, it would
and obviously you guys can't lie, so I mean we don't want you guys getting yourself into trouble. But like those are the sorts of things that, especially if you've got your pitch day coming up on February 15th, there are all these sorts of things. That's what will really, make you stand out from the crowd, right? And everyone will be like, oh my gosh, and then you'll have people throwing money at you and everything, and then that puts you in an exciting spot because then you don't have to go into the negotiation. It's better to be oversubscribed. We always like that.
Completely. Yeah. That'll hopefully, Charles, we catch up in a month and we say we've pitched, we have Tom Griffiths on board. These sports books are lined up. The conversation's been great. But yeah, no, completely understand where you're coming from.
There's also one other guy we've been talking to. He's the host of the #1 sports betting podcast in the UK. It's called The Final Furlong. It's a generally horse racing specific podcast, and then some soccer or football, as they call it. And he's spoken to us and basically said, I love this idea. It's innovative. It's very exciting. He's spoken about creating a podcast with us and putting content out there. And then we've also spoken to him about coming on board, being a board advisor, him giving us insights. So just another connection there.
Yeah. And the other thing too, you may not need advisors per se, because basically what you're trying to come across is you're trying to show that you have proof that your thing is actually going to be successful, right? So maybe like people will say like the FanDuel guy or whatever will say, oh, well, for me to be an advisor, that's too much work. But having quotes from people or whatever, do you see what I mean? Like in terms of customer acceptance on your slides, right? Because essentially investing is like you're selling, and what we care about as investors, or what everyone cares about if they're trying to build a company, is, are you solving, like, is this something that's going to make that target market go, oh my gosh, this is the most amazing thing in the world, right? So maybe the FanDuel guy, or maybe that sports blogger guy or whatever, like they might not, for whatever reason, because of non-competes or whatever, be able to get on there and say, oh, I'm an advisor, but he can quote it and say, hey, I was the co-founder of FanDuel, I was the product guy and stuff, and I've seen this thing and this is absolutely amazing, or this is gonna, change the world as we know it, right? And you stack up enough proof on that side, that also creates that perception of, traction. And hopefully you guys actually have traction too after that. But do you see what I mean? Like this is like, you're trying to get that person excited so that they will then get to due diligence. Because if you think about it, when you're pitching, you've got 15 or 20 minutes. And what goes on, and this becomes more of a consumer psychology thing that you guys may or may not know. And Gene, you can always pop in. You have to get the person to emotionally say yes. Once they emotionally say yes and they get to due diligence, like all the other stuff, like term notes, like that's just logical justification for that decision they made based on that gut feeling. This is how people buy. So whether it's like I'm getting a Tesla and then I justify to myself, oh, I'm buying the Tesla because it's got good gas mileage and environment. I mean, that's complete crap, right? People buy it because they thought it was cool, right? Or I bet on this because of. I mean, you're trying to, like, in your pitch aspect, trying to hit those emotional buttons that make someone say, oh my gosh, I want this, right? So it's like the customer, it's proof, it's market adoption. It's this amazing thing that you guys are doing, which you guys are doing an amazing thing. So it's not that hard. It's just, presenting it in a way. And then after they make that decision, like this thing's amazing, then they'll get into, oh, let's talk about how your system works, or how you're doing your blah, 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 or blah, blah, blah on that front.
I have a question as well, guys. Actually a suggestion as well. So that 160K that you have, that's kind of soft, or you said hard commitment, whatever it is, right? That you have somewhat committed, let's just say. I think it's important to put that in your pitch. I think that's pretty important because it's always hard to get that first person to sort of come on and kind of lead the round. If you guys already have that, I think it could be very impactful. Another thing too is I'd like to know the sophistication level of that investor as well, right? So is that is that investor somebody that is invested in this space before, right? Or are they, for example, maybe it's one of these influencers, maybe it's the guy from FanDuel that's actually, committed $160,000, right? So if you have somebody that is a sophisticated investor that knows the space, that's already come in and invested, I really feel like other people are going to jump on board just because of FOMO, right? I've seen that happen hundreds of times before for that exact reason. So could you just take a second and talk to that question? How sophisticated are the investors that you have that have these, you said there's a couple of angels, but there's also one that you have this $160,000 commitment as well. So could you talk to their sophistication level?
Sure. So they're out of Chicago. They're a small syndicate that has a lot of their experience is trading. So day trading and stuff like that. So they're very familiar with the options and everything, and they understood the concept immediately like that. So it was very easy from the get-go. Where the majority of our time was spent with them was digging through our financials and making sure we had enough runway, our burn rate was right, stuff like that. So in terms of how they want to be involved, they wanted to kind of take a backseat approach, but that doesn't mean that their level of sophistication is low. It means that they dug through everything. We were calculating IRR, CAC, LTV, all the stuff we went through before for them, running through all of that. So they completely understand what we're doing and the market and the trading aspect of it, along with the financing of it. I would say they're pretty highly sophisticated, even though they're taking that backseat approach.
Yeah, and I think
that's actually some good feedback and something to think about too. The way you present is going to differ based on the type of investor that you're talking to, right? So like in my case, I understand finance, but I'm not like at the DRW level or, the sophisticated quant shop models or technical, those levels, which may be the traders that are, invested in you, even though I have, many colleagues in that space. And I happen to know the consumer side, so I'm asking those sorts of questions. Now, if you just go to traders, you probably can just ignore everything I said and just get into it, because anyone who's a trader instantly understands what you're saying, because it's all about liquidity and profit taking and stuff like that, and they'll totally get with it. And people who are traders, like especially like the big hedge fund guys, because they're used to these liquid markets, they don't really worry about consumer acquisition. They just don't, because it's just never occurred to them. So, they just don't have to worry about it.
Very true.
So you go hit up like the OCA Ventures of the world, the DRWs, and I'm just bringing up Chicago firms because you said, you knew Chicago. You talk to these quant shop guys, you find the guy who's traded, who also does a little betting on himself and does it on the side. I mean, you can easily probably get $50,000 to $100,000 checks, from these guys, because they just get it and they'll eat that stuff up.
Completely. Yeah. I mean, as you were saying, I don't even think we had a conversation about consumer acquisition. It was all about the financials and all of that data. And as you said, it just comes from the liquidity's there background.
Yeah. And it's also, this goes back to your, this is a higher level of sophistication on your investor presentation. But, all of us bring our own, you can call it baggage or expertise, depending on how you look at it, right? So, and if you get to know me better, Gene, I'm a consumer guy, right? So I'm all about, I'm the guy that's trying to get that video going to, getting 1 million views or 10,000, like that's the world I live in, right? As the consumer guy. And even though I'm in finance, I'm more in consumer finance. Those are the big things on my mind. Do you see what I mean? So that's what I'll hone in on. While you talk to a trader guy or whatever, a technologist guy, who's been successful, especially the trading guys, they're just going to look straight at what you're saying. And it makes perfect sense. I mean, it just makes sense to them. And for them, it's their comfort or expertise.
Completely.
Yeah. And I just want to reiterate one more time, guys. I think that the fact that you're the people that have sort of committed to some extent, because they are kind of in the industry. I mean, at least they know finance, they know this, they know it to some extent. I think that really does validate you guys. So I would maybe, include the sophistication level of the investors when you're talking to others, right? Because it could definitely, I think, entice them to invest, because you have that, like I said, it's very difficult to get that first person to kind of come in and to make that commitment. But since you already have that, I think that could really help validate as well by kind of putting that out there. I don't know, Charles, what's your opinion? That's not something you necessarily mentioned that you put into the deck, but it may be something that you mention, right, to potential investors.
I mean, that is really, it goes down to who you're talking to. Do you see what I mean? It's really the social proof side. So if you had a Chicago trader that, or a syndicate trading group or whatever, I don't know if it was the OCA guys or, like in Chicago, there's basically like 4 major trading guys that, groups that have come together and have really owned that world. If you had one of those, that only applies for like that little niche in that circle, right? Do you see what I mean? Like if he brought up the Chicago traders to some Silicon Valley angels or something like that, or if these guys were, I don't know, cryptocurrency enthusiasts or whatnot, they'd be like, I don't really care on that side unless you have like, the guys off of, the marquee guys, which, you're not going to have it. If you have Elon Musk, okay, yeah, sure, everyone's going to want to invest along on that side. So that's just feedback on that front. I do think, there is probably, especially with sports betting and everything, from an investment strategy perspective, there's something to be said about, taking a targeted approach to your investors and pitching to those right high net worths and everything. And like, if you think of the affinity side, people who are traders and people who are like these quant guys and everything, like who like love that stuff, like they probably also bet also. And I would imagine the affinity level is really high, and your ability to extract, or I don't want to say extract, but your ability to, get investment from them versus someone who's not in that field and is just kind of cursory, might be much higher. You see?
Right.
Completely.
And that's just something in general just to think about as you guys are raising money, is that, A, not all money is equal, and B, people invest in what they know, right? So if you're going to go talk to the guy that's like the organic foods guy, right, who made, $1 billion, I don't know, selling, vegetable proteins or whatnot, and it might not be the right guy to talk to on that versus, the co-founder of FanDuel will be like, this is great, I'm on board, I'll, invest 50 grand with it. Do you see, like that sort of stuff happens all the time?
Yeah, I would say that people invest in what they know unless somebody that they know is versed in that space, right? Somebody that they trust. So for example, maybe I don't know the finance market, but Charles does, and he says, hey, I'm investing in this company. I may invest alongside him just because I trust Charles's opinion, right? So that's sort of the idea there, right? I've seen plenty of technology companies get funded by, by angel investors that made all their money in real estate. They know nothing about technology just because they trusted somebody else that was investing in that space as well. So I would just add that as just a small caveat there. So
cool. Well, hey, let's get this wrapped up. I'm just going to stop the live stream. So everyone who's still tuning in, we still have people actually watching this thing. Thanks for tuning in. We'll sign off and then we'll wrap this up. So thanks a lot, guys.